to the Stock Market Morning Prep video for Wednesday, July 30th. Red across the board. Dow Jones down 70, Nasdaq 2 and a quarter, S&P down $8.96, and a Russell actually eked out a gain $2.14. So, what is this market telling us? Well, first of all, we have very, very light trading. We have no volatility, and obviously we have an extremely bullish uptrend. So how do we trade it? Well, I'm seeing repetitive patterns again. And what do I mean by that? I mean patterns that continue to take shape for weeks and months. And I'm going to show that to you in the chart. And my analysis from Monday still is valid for the rest of this week. I do think you still need to sell any type of rally early, or I need you to buy the dip. And what I mean by when the markets get weak in the morning, you need to sell that first rally, and then let that market start to subside, bounce, and then you need to buy that dip, because that's really what the mentality is. The markets right now, as far as the indexes, there's a few that are ready to catapult back higher again, and because they're basically in a good sweet spot at the moment. So what I think what might be happening, we have FOMC rate decision today. And then we have the childcare job numbers on Thursday, tomorrow, which are a little bit volatile. And then you have the non-farm payroll numbers that come out on Monday. And, I put less credence into that number as the months go by. Everybody, it's a big market mover. Yes, it is. And it was a big market mover, but not so as much. I think a lot of market participants, investors, and traders, they tend to gravitate to that number, and then after a couple of days they just go back to what's really important. And in this case, for the last several months and years, I've been buying the dips. Aside from anything, any geopolitical news that comes out, aside from that, if nothing does happen, I do think that you could push into the S&P up to 1990, and even an overshoot to the 2000. I would love to see that, because I do think by then the markets are pretty vulnerable for a decent little downside movement. Right now, they're showing me, if you look at the Japanese spot future, right, that's a Japanese yen spot future, we have broken down from this ascending triangle, which we've been all year. Okay, this is just going to bode well for the bullish case, and I do think that the yen will help push this market a touch higher, where it needs to make another all-time high and get every retail person giddy that they want to put more money in at these levels, which really is sanity. It's an insane move to do. However, this is what the markets are telling me. This break of this ascending triangle, we never really broke back to the upside. This large engulfing candles, bulls of the Japanese yen, never materialized and started to break down. So this is bearish for the Japanese spot yen, but bullish for the dollar yen and bullish for the markets. Okay, and that's where this might add a little fuel to the fire. Bonds are still sitting tight, which is fine, but let's look at the ES future. The S&P, E-mini S&P future, repetitive pattern, bull flag into a support, rip, bull flag into the 20, rip, bull flag into the 20, rip, bull flag into the 20, we break down, bull flag into the 20. There's no reason in my mind that we can't go higher and test this 2000 area at the upper end of this trend line. Obviously, we would need to hold this low, which would be the low from, I believe, Friday. 1960 needs to hold, okay? Better yet, if we do flush this morning for whatever reason, this other low here would be the 50-day moving average, called the 50, or at least the middle of this trend line area in purple would need to hold. Okay, so, but repetitive patterns. So at any given moment, we could absolutely explode higher again. That's why I'm still thinking that we get one more move higher. Let's take a look at the diamonds. Diamonds a little sloppy, but same thing. This one here, I wouldn't call it such a bull flag. We had a gap lower from the Boeing news, and then now we're back holding this 50 again. And really, the diamonds really took it on the chin yesterday. So not so much a repetitive pattern, but again into a support line where we can easily revert back and move. Now the S&P future is up 4 handles this morning, so it's starting off the session on a pretty decent bullish note. Okay, take a look at the IWMs. Now the IWMs need to hold this 61.8% retracement. All right, this is a good spot for a bounce. Now it did so here, but just created a bear flag and broke down miserably. So the IWMs really need to get going to the upside. And really, to alleviate any downside pressure, this local top here is 115.85. Needs to get taken out on a closing basis to start ripping back to the upside. I think this is the big market divergence that everybody's looking at, because if the IWMs do decide to break down, guys, all bets are off to the upside, and I think we start headed lower rather quickly. Okay, so watch the IWM, the Russell 2000 ETF. Very, very important for your midday, your morning, and your end of day analysis. Very, very important to see where this is at all times. All right, take a look at the transports, repetitive patterns. We had a doji into resistance, sold off. And I mentioned this on Monday. I said, guys, be prepared for transports to probably sell off. Boom, we sold off. Also, we had earnings from UPS. That didn't help much either. But we're in that center trend line area. We're still making higher highs and higher lows. This is still bullish. I do think that it gets to this area here, like we've been talking about for several months, for at least 6-7 weeks. That's going to be the first area of support once this breaks the 50-day moving average. But you can see repetitive pattern here. High, broke down. We hit the high, broke down, hit the high, broke down. So repetitive patterns are upon us, and let's just see how far this thing breaks. Lastly is the Qs. Apple did okay. Remember, Apple's heavily weighted in the Qs. It's funny how the Qs have been holding up well, where the technology sector, a lot of the semiconductors are really have a mixed bag right now. We need to pay attention to that, and also we need to pay attention to the banks and financials, see what they do. Okay, all right, guys. I think it's going to be a slow week. I don't see much into any specific sectors that I like. I am watching, obviously, the solars, the builders, the banks. The semiconductor index, that's a big spot that I like to look at for clues. Some of the 3D printing stocks they're still wishy-washy, but again, keep an eye on your watch list that you're creating and stick to it. Even though it's slow, you're definitely going to get a trade to it. And again, guys, even if you do one trade a week, 2 trades a week, for now, take what you can get and then wait till the markets start to really either move to the downside or break higher yet again. Right now, we're just in chop mode, and it is the middle of the summer, so keep that in mind. All right, everybody, have a great day. We'll speak to you tomorrow. Take care.